Hey everyone, this is Mike Fairborn. Good to have you here for Markets and Sectors. It's good to be back. Joined in the chat by a good friend of mine, John McNichol. Folks, great to have him on board, and it's a privilege to have him here with us. Welcome to all of you. Ray, Jay Richardson, we've got Kenneth Anderson, BJ, Scott. Aloha to you guys as well. Good to have you all on board, folks. Today I want to take a look in this class and kind of transition this class a little bit from what we've done in the past. In fact, what we're going to start talking about are placing, example trades in this class, but really around top-down analysis. So finding out, what's strongest within the market in terms of sectors, industries, sub-industries, and then ultimately the stocks behind them. We don't do ETFs in this class, so we wouldn't be looking at ETFs on industries or sectors, although there are some ETFs out there for sectors and industries, just as a side note. But I want to do that. We want to tie that in with macroeconomic trends, which are always so interesting. And just so happens that's what we oftentimes will pick up on within sectors and industry analysis are those macro longer term trends where fundamentals might be strong for a while. So I look forward to going into that with you all. Folks, you can follow John and I on X, John McNichol CS, Mike Fairborn CS. I want to make sure you put the CS at the end of those. And a quick note too, in a couple of weeks, this class will be moving to the 2 p.m. time slot on Wednesday. So just an hour behind, still the same day, just 1 hour later. 2 p.m., that is my time, that is Mountain Time. But just make adjustments for that. That would be 4, Eastern or 1 Pacific. So just a quick note on that. Well, folks, let's do this. Let's dive into some disclosures so we get going here. Information here is provided for general information purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper money software application is for educational purposes only. Investing does involve risk, including for some products, more than your original investment. Now, we do tap into futures, just looking at some of the charts here, because they do provide us with some relevant volume type information. So just a few quick notes there. To be mindful of on futures and futures options trading does involve substantial risk. It's not suitable for all investors. Finally, past performance is no guarantee of future results. So with that, let's go ahead and share just the main screen here and see how we're doing. Folks, pretty much in line with what we had seen previously within the market, and that is, since these lows in April, hey, I'll tell you what, we got a little bit of a bounce, didn't we? We sure did. We bounced up. In fact, just as a quick note, how high did we go? I realize I am cherry picking this a little bit. This is right off the bottom and right off the top. But just to give you a general idea, that was about real close to a 23.5% bounce off those levels. So obviously some big impacts with the announcement of the tariffs, but then afterwards, some recovery and some pretty strong recovery. As a matter of fact, we broke above a lot of those tariff announcements right there, which was actually kind of another big potential resistance level as we cleared the prior 2 levels. And so as we look at the general market, it's safe to say that we did make a new high in terms of this trend up and thus far a higher low. We also had, as of yesterday's trading range, a close above the high of the low day, which sometimes is indicative of a cahold, as James would say it, cahold, not K-hold, like I used to, but let's say a cahold, whatever. Close above the high of the low day, but it's indicative sometimes of the beginning of a possible mini flag pattern, let's say right here, just starting to get underway. Here's a good example of a cahold right there, which is an acronym, right, for close above the high of the low day. But you can see that right there. And a lot of times when you get that, you might get indications that you could get a follow through from that point on, and you might have an idea where the next resistance level could be. In fact, let me just point that out while we're right at it. There it is, resistance, and we'll just drag a line right through there. Basically, what we've drawn the top of our fib levels off of. In fact, I'm going to take those off now because there's no sense having them in. But we did break above the 61.8 level on that short-term basis, which is really good to see. Okay, in terms of what traders might be looking at. And by the way, just a quick note, this bounce came right there, that low that we'd been previously looking at, just below the 5,800 as well. So the possibility of a staircase higher here too. We'll see how that does unfold going forward. Consumer confidence numbers came out yesterday. It was the biggest jump in quite some time. I put a little X post out on that, but more confidence after maybe some of the tariff negotiations or whatever the case might be. but a response there, and we'll see how that goes. Now, a quick note, you can see the bounce two and the RSI coming up. RSI has pulled back a little bit, which is pretty regular. A lot of times on these stronger runs that go for a longer period of time, these extended moves, the RSI oftentimes, if it is strong, it might hold up into that upper range as well. And we just kind of saw that there. Now, folks, I do like to shift over to our ES so we can get a little bit of volume. Let me clear that off, and let's just see how that volume is doing. Well, you can see over here the volume, it's still at pretty decent levels in terms of what we've seen in the past for these extended moves to the upside. So we got that strength. Want to focus kind of eyes on the money flow, which we can do with these index futures. It does have volume associated with it, but you can see the money flow, which nets out the buying and selling. We like to check this out each and every week. We can see that this high point over here, I think this was this is certainly the high point on price. You can see down below that in this general range, we hit about a 150 over here. Is a reference, is a guide to that rally. Folks, we got very close, and look at money flow here. That has held up very, very well in terms of what the money flow is showing. Buyers relative to sellers, right? Netting those two out, what do we have? We have a sideways range right there, which is interesting because perhaps we could get a move to the upside now. I mean, in other words, that could tie in with this bull flag, potential mini bull flag scenario that we're looking at right now. Okay, real quick look though at the NDX, much of the same, but on the verge of actually breaking higher. We had the RUT as well, a little bit possibly now, even though it looked like a pretty big move to the downside, a little bit of a bull flag here. What really stands still is that 2100 level right there along those prior highs. Since we already had resistance off this point, it could be interesting to see what we get going forward. Now, a quick note on all this too is you can see down here shoulder, head, and shoulder right there. There is the possibility also of an inverted head and shoulders pattern. You can see those shoulders. A lot of times the dead giveaway for me is they line up pretty well. And folks, does anybody follow this? I mean, the head and shoulders, inverted head and shoulders pattern is interesting. And the follow through is also interesting. In fact, it's got to take out the neckline. But if it takes out that neckline, then you're going to get this potential move in price right here off of this high down to this low, right? This range. Just draw some arrows at the end. Why not? And we take that, and the projection is to the upside, that amount. And you'll notice, just kind of eyeballing it, it might put us very close to 2450. I'll tell you what, you guys, we can do better than eyeballing it on this platform. So let's do this. I'm just going to go ahead and click. Here's a cool one. I mean, I like this tool over here. It's the fib extensions. It's going to give us that 100% retracement real quick too, real easy. Look at this. It's right there. Click one time. Okay. I clicked again. It's actually just one time, but there you go. So let's say we take out the neckline. Boom, right there. Where's your 100% retracement of that range, which is the minimum retracement level? It's actually even above the highs that we saw back in December for the Russell, a little bit higher. So some interesting things to draw in here. I spent a little bit more time on the RUT here because this same pattern, we're actually seeing some industries show this as well. Let's start talking about that top-down analysis and looking at maybe some macro trends that we could factor in into current sector strength. So to do that, actually, sorry, one last thing I want to check. Sorry about that. One last thing, I do like to review just a weekly chart. There's your weekly of the S&P 500, and there is your monthly. And notice we are taking out the 50-period moving average, 50-period weekly moving average, and then also we've got that monthly moving average that we've tracked quite a while, that 13-period on a monthly basis, and just getting back up above it. By the way, still holding strong, real interesting sort of a pattern there, right? It's one of the ones that I've looked at over the years, and it is interesting. I mean, it's one of those, it's a morning star pattern, but the funny thing is it's on a month, which is a big, possibly a big reversal, but of course we're just talking about candles, but it is a bit longer term. Nonetheless, it is a flag that we saw here and the possibility of another flag with a long extended candle coming down. We'll see about the follow through. Okay, well, let's do this. I want to dive right into our sector grid right now. so we can see this and see how it's been shaping up. Now, we've talked about consumer staples for a little bit, and that has been a defensive sector to take a look at, right? And it's been holding up actually pretty nicely. We could actually say over here, in fact, I'm going to go ahead and just maximize this so we could see it. What might be happening here is the possibility of an triangle pattern. To the upside, the possibility of a triangle pattern breaking out. And so that makes these levels that we've kind of drawn in here of resistance, again, and even where we're at right now, maybe a little bit more interesting, because if you can get above it, that's something we haven't been able to do as of yet. You'll notice when you see the kind of upward sloping right angle triangles like this, what you're getting is ultimately higher lows. And so we're seeing something interesting happen. We're getting defensive stocks, defensively in that sense, right? They're more defensive in nature. Staples, people are always going to continue to buy the staples. But when we look at some others in here, like for example, technology, infotech right there, it's kind of a little bit of a mini bull flag. So it's almost as if, if there is some negative tariff news, you might get a move here in this group, perhaps. We don't know, but I mean, that's sometimes what we've been looking at. We've seen that rotation back and forth. Or we're just going to see continued strength, maybe within technology, which tends to do really quite well when the economy starts to pick up again. And we've been seeing some signs of that as of late with the economy, GDP numbers as well. Interesting. So it's going to be a very interesting scenario. One area too I wanted to kind of highlight for you that I think might be the strongest on the entire map that we have here. Okay, let's point out a few. So we have, in terms of the real strength, like many bull flags that have just recently come up, I would say, infotech is there. We have consumer discretionary. We also have industrials. Now, of those three, if I just step back and look at the chart, let me show you a little trick. Go back a little ways and just say, what was the last major high? We kind of hit this high across the board on each of these, and that was the high. We're still below. We're very close to breaking above that high. Kind of more like a weekly type high on technology. Consumer discretionary, a little bit further away, but take a look at industrials. We've broken above it. And there's the possibility of a flag pattern in here right now. So if we're thinking about top-down analysis, we think, how does the market look? How do sectors look? And then what do the companies within that group look like? Let's right-click on here, maximize that grid so we can see a little bit better. Because remember, these are just companies within the S&P 500 exclusively that fall in to that specific sector. We took out a high. That's a sign of strength, clearly, and so it was a really strong move and a pullback here. Now, one thing we could say, I'm just going to type it into the chat right now. Tariffs, question mark. Think about the number of companies that are coming back to the U.S. So think about in terms of, now we're going to be looking at the macroeconomic trends that could be helping to push this a little bit higher. Think about the incentives for companies to not have a tariff if they manufacture. Manufacturing is big in terms of industrials within the U.S. And you've heard about a number of companies coming back to help stimulate the economy and create more jobs, et cetera, and open up more fields for American citizens, for example. But that could be a longer-term driver, right, within the Trump administration. If that continues on, it could show benefits. So one thing we can do, and you guys, this is just a great way to be able to kind of tie in, the number of companies that are making moves, because I want to narrow down a few of these to put some paper trades on here as we go through this. And by the way, welcome to all of you just joining us here. But you guys remember when we talked about the old scan tab, we went over here and we said, the cool thing about the scan tab is it allows us to not just look for specific companies here, groups, like a major group, because that graph that we were just looking at, that chart, were just companies in the S&P 500. So we're going to scan just for the S&P 500, but we've got this great tool intersect with. And now we can narrow it down because that ultimately is our top-down analysis technique and tool to use. Okay, I'm going to jump back here to a standard screen. I'm going to take this off for just a second, just to highlight my blank screen here, just to point out a couple of things. So in that top-down analysis, what we're really looking for is M for short, which is market, right? So you've got markets, then you go down from that. The highest level is the market. Then you got sectors. And then you've got industries that we're going to be looking at here specifically. We're going to scan next. We had to use the scan tab to get the industries. And then finally, stocks at the bottom. Okay? And when you look at this, basically, I could draw this right. It's like an inverted sort of a triangle here. Top-down analysis, market, sector, industry, and finally, we're going to look for some stocks. And I did say before, though, too, there could be like ETFs. Of course, there are ETFs for the market. There are ETFs for sectors and industries. But we don't do that in this class. We're going to be looking specifically at stocks. And the whole idea here is, folks, and this is a concept actually you'll find in books that were written like in the 20s and 30s. They really started talking about it in more detail. But it's been a thing ever since. And you have to say it might remain a thing, top-down analysis, because it's built on where is the market showing a trend? Is that to the upside? How about the sector strength? We just looked at sector strength in terms of industrials as one of them. The industry, we're going to take a look at the industry here in just a second, and finally the company. So it would stand to reason that when the sector chart was doing one of these, broke down, that broke up above a high and kind of flagging over here, potentially, if you have a strong sector, what's pushing up those sectors? Well, it's got to ultimately be, you have to say first the industry, but ultimately behind that it's the stocks. So what's behind there? That's kind of our clue in as we, combine macroeconomic drivers to this kind of scenario. So let's get that going and see what we can pull out of it. So I'm going to jump back over, and that's where we have to go to the scan tab, because I don't know if you guys have tried this over here. It does not work. It doesn't work if you're trying to get, like, say, for example, well, I can use this. That's okay. I'm just going to pull up a watch list just to highlight this. It does say industry, so we can pull up industry. One of the main, I have to say it, flaws here is that I can't select the S&P 500. First, I can select the S&P 500, but I cannot select the industry from it. So if I go over here, I just say energy, folks, that's all energy across the board. Penny stocks, there's going to be tons of penny stocks in here, right? If I were to click on this, you're going to have thousands and thousands of companies. It's not going to be noted kind of like the more well-known companies that might have a lot more liquidity behind them. Let's say the S&P 500. So that's a real disadvantage here. It'd be so great if we could have it here, but there is a workaround to still be able to pull up the charts. I'll show you that as well. In fact, it's this column right here, in case you don't have it. But I'm getting a little ahead of myself. Let's just show you this first. So right now we are in the scan tab, so we could pull up the industries, and ultimately the stocks is what I want to look at. So we're in the scan tab, sub-tab, Stock Hacker right there. With that, we have selected the S&P 500 to scan in. Now here's the key thing, intersect with. Now we're within the S&P 500 industries, and that right there are our industrials. We can look through, and there's a ton of different industrials in here. Transportation, airlines. You can take a look at airlines. I'm going to go right now to select all industrials, and we're going to click on scan, and it's going to tell us that there are exactly 77 companies that fall within that industrial list. So looking at the S&P 500, if we're using exactly 500, I think there's a little bit more than 500 companies right now in the S&P 500, but let's just say it's 500. About 15% of the S&P 500, a little over 15.5% roughly, is made up of industrial type stocks. And it seems to be the strongest sector that we were able to get that information from the stocks at first. Yeah, Riceberg says it sounds like a reasonable plan. It's kind of based on logic, that top down, right? By the way, John made a note in the chat. Folks, there is a survey out there in the chat box. If you get a chance to click on that, that'd be great. Anything you find helpful, useful, whatever it might be sure and put that down. I read those comments, and so does my manager. So if you're able to do that, that'd be great. All right. By the way, if you're getting value out of this presentation, smash that like button as well. And love to have you subscribe, folks. Okay. With that, here are a list of all those companies. Now, if I want to, I can set up all kinds of information in here. You can see I've got PE ratios. I can still do that right within the scan tab, right? Because I have this column up here, which is so nice. So any sort of, I teach a ThinkScript class on Friday. Any ThinkScripts we've got, or whatever the case might be, you want to have in here, you could certainly have it right in a scan. Now there is also this column. Let's right click on it. It is just send to is what it's called. Send to red. You might already have an idea what that's going to do. If you haven't seen it before, let me just quickly show it to you because we're going to be using that a lot in this class going forward. But if I detach this guy, it's just going to pull it to my other screen. And what I want to do is I want to scan it right now for the same list of stocks. Okay. Now I'm going to minimize this over here to the right. I'm not going to be able to see the names because I've got so many columns, but I could clear out these columns if I wanted to. But if I go to my charts, it remains. Oh, I'm in Bookmap. Hang on a second. I'm going to go to, what did I do wrong here? I'm an active trader for some reason. Okay, just a second, folks. Put this back in there. Okay, that's what we were missing. All right. So now if I open this up, put this back to a daily, I detach that, so it's going to pop up right here. And if you haven't seen it before, there it is. Okay, so I need to clear out a bunch of these so we can see the actual symbol, or I could just simply pull it over here. That's going to be easier. And then I've got this column right next to it, and that is that send to, right? So quick note, if we are in this section, the send to would be like right over here. Send to, just type in send to red. Just send. You got it right there. Okay, great. Now, pull this back, and I just lost everything. Perfect. All right. Right on cue, right? Just as I was going to get ready to show it. Back to industrials. Good chance to just review it again. Back to industrials. So I'm just clicking on this section right here. I've opened up a watch list. Clicked on the plus sign, right? Got a new watch list up. Drop down here. We're going to go right back into industrials. By industry first. Industrials, select it all. And I could click on this just to show it. But what I've got pulled up here is this. Okay. So you can look at industrials that way, but doing it through the scan is really the way to go. So here you go. Here's your scan. And going to show you a few of these. Look at this. ADP, folks. You thought we saw a strong chart on the sector. Well, turns out we might have already had a shoulder, head, shoulder over here, broken the neckline, and perhaps we've already had a bunch of that retracement already. Maybe it's a little bit higher than that, but it's getting close. I mean, do you see it already? So that one, we ask ourselves, hey, why was there sector strength? How were we able to pick out industrials? Stocks like this, one of the 77 in here that was really doing quite well. Other ones, let's go down through here. Nice solid run up, sideways channel here, a possibility of a breakout. This could be one. Let's see, I don't know too much about this company, ALLE. We can take a quick peek at it right now. So we know it's an industrial, so we have an idea that it's industrial related, of course. Control doors, door control systems, a lot of doors in there. We'll say that. Access control systems and actually software as well. Okay. So interesting. Good rally, good sideways move. There are going to be some others in there that you're going to be familiar with too. Here's one I want to point out. I'm going to scoot down. This is a great way to just kind of go through here and scan. But here is Caterpillar. Okay, kind of similar. A little bit similar to what we just looked at there. This is going to be probably a larger company, with my guess for sure there. I anticipate Caterpillar, but you can see the run up here and the pullback, bounce. Interesting. Okay. Sort of still. We're seeing a few of these out there. Shoulder, head, shoulder. I know you guys look at these patterns. I mean, I do. We've talked about them quite a bit too, this class and others. But the thing is, so what do you guys think? In terms of a paper trade, we're talking about paper trades here. Just out of curiosity, do we buy it now or do we wait for it to clear the neckline? What do you think? What are your thoughts on that? Do we buy something like this now, or do we wait? One way to look at this is just to throw out some ideas. We are at resistance right now. A little bit of, some major historical points too for potential resistance. How much could we give it a little? I mean, unless it just gaps higher, but are we giving up that much, folks? Look at this. It's like from there to there, resistance. It's such a small area. Could we potentially wait and try to get much, much greater confirmation? Oh, I like what I'm saying. Okay, some say no. And you could do a portion, right? You could do like, money management. You could add a portion of it. Maybe let's say if you were going to do, let's just say, for example, 100 shares. Maybe somebody does 25 right now just to get in the gain because they're convinced it's going to go higher. Or if it pulls back, they're fine. It's going to go like this. But the thing I wanted to highlight is you're not giving up a ton. It could potentially break out. It's still resistance though. But if it breaks out, how much are we giving up? Honestly, I mean, it may be a very, very small amount to get a close above here. Now, if it starts to break above there with good volume, like on a like shorter term time frame basis or whatever the case might be, could be it could be interesting. It could mean that it's ready to take out that high and go. Let me show you this. Here is that intraday time frame. Gosh, I don't like when I have the hang on one sec, guys. I don't like that extended hours all the time to just kind of visually see it. There we go. So that is what that 30-minute chart looks like. We talk about this a little bit in this class, but looking at it short term and saying, well, what's happening on a 30-minute chart? Hey, possible flag pattern. We've talked about those flag patterns. Maybe there's another one right there. Maybe a little bit of support resides right down through there. Maybe the possibility of a breakout. Maybe it shows support. Somebody tries to buy at that support level. I get it. But look over here with me. See that range? That's kind of what we're looking for to get out. Can it get above that level? And you can keep close tabs on it on that with the shorter term chart. In fact, we need a little bit more data, don't we? So I'm going to go ahead and just we'll extend this out. Maybe 30 days will do the trick. No doubt about it. There you go. Now I can zoom in on the whole thing and say, that's what this guy looks like pumped up with all that extra data there. What is it, like something like 12 or 13 more bars we're looking at on a day-to-day, on a day here? What is it? 13 bars, right? Because there's 30-minute bars throughout the day. And so this is actually very, very, you'd have to say it's holding a lot of its range over here. So right now, from what we're seeing, a lot of traders, investors would say that's kind of strong because we're holding it. But let's do this. For this particular one, we're going to go like this. And we're just going to say, right click, just let me know. Let's take advantage of some of the tools on the platform. Right click, create alert. Boom, right there. So notify us. Let us know if in fact it breaks above that level, and notify us via email or text. I use text messages. It's about 3 to 5 seconds. What you want to do is just go under application settings to set this all up and notifications, and it's all there for you folks, okay? So that's what you can do is you take a look at this, and that could work. So I've got this set up, and I will get an alert on this as well. But I wanted to show you this. Now that we're thinking about this, what else do we have? We've got Caterpillar, and so I'm going to stick with a wait, okay? I think there were a lot of weights in there. We're going to wait this one out. We're just going to see what we get. And then we can kind of review it again as it begins to pop up. But this is one I might go ahead and just place a paper trade on if we do get that breakout during the day or we close above this level. Maybe one of those two. But if it breaks above, maybe with volume, maybe a volume indication that it might actually hold that resistance level because it's actually been a while since we've been able to get back up above it. In fact, it's been since about mid-February. All right. So the next kind of thought process here is we've got CAT. And we know there is another company out there that's similar to CAT, but different at the same time. This is tied more into construction. And the other company, you might have heard of it before, I drive one around in my yard. John Deere. Now, I don't drive the big ones around. Don't get the wrong idea. I don't live on one of those kind of lots. I'm not a farmer, but I do use it to mow my grass. one of the best. I mean, it's nice because then you can, well, doesn't take me all day, put it that way. Mow along. Let's go full screen here. Let me show you something you got over here. Now, we were just talking about some of the strongest stocks out there that made this sector kind of interesting. We looked at ALLE, we looked at ADP, but we didn't have to go too far down the line here to take a look at John Deere. Think in mind, still, what are we talking about, folks? We're building on the possibility of a macro trend because we are talking about, sorry, I'm kind of sloppy here off the top. My mouse is sliding all over the place. It's a macro trend longer term due to the T word, right? Tariffs. We know that a lot of the tariffs already and the funds coming in the way it's being structured in terms of avoiding tariffs for even American companies or foreign companies is to make it in America. So could that be a benefit? It's interesting, you know? We're starting to see a lot of strength within these groups, and that is one of these that is stronger than the sector. So that's really helping industrials kind of, keep going here. Now, as we look at it too, I mean, we did break above the high here, and we did pull back down, and that's a bit of a flag, isn't it? So you got a flag, flag, flag. So this is kind of like par for the course. I mean, that's what we've been seeing thus far. That, of course, that can change, but that's sort of the structure of the trend as it stands right now. We did get past earnings, and it looks like earnings was a nice little pop, kind of a flag. And some people will wait for that hold pattern to take form as well. A close above the high of the low day there. Okay, it's resting right now, though, at a support level. Gosh, it ain't cheap either. It's in the 500 range. Okay, so it's in the 500, but I wanted to do something like this. Let's just say that we wanted to purchase in total 100 shares. Well, I'm going to cut that in half. We're going to go with 50 right now because the flag pattern's kind of holding. You're getting a little bit too of a confluence of candles if we really zoom in on it. Shooting star. Shooting star. Sort of, it's off the bottom, but it's a candle type pattern. We got something close to a doji, and although the day's not done, we've got a half hour left. But we're getting another doji, and that doji is sitting very, very close to being an inside day, also known as a harami. All right. And so maybe a confluence of candles, but the one thing is notice price action, folks, slowing down. It's slowing down over here. Look at it. It's slowing down. And how does volume stand? Perhaps fewer sellers as well. So in other words, you tell me this. We made this entire price run range. We crossed above resistance. We might be holding near that. Well, if I draw the closing prices, which I normally do, we're holding virtually right at that level. We're holding above 500, a big round number too. I do keep an eye on those round numbers sometimes, but look at the volume. I mean, the volume, build up, build up, build up. And so sometimes that's all you can ask for is just a slow, steady advance buildup of volume as prices are going higher. But what you want to see on these flags is just that big diminishment of volume coming down. Of course, you don't want the money flow line to dip too much, and we didn't. Okay, we just kind of held a little bit flat through here. So this could be interesting. Like I said, there could be a driver behind the scenes, and that's going to be one cool thing that we'll get to maybe look at in this, as we're looking at top-down trades within our markets and sectors here. But folks, I still want to put at least half of that on. And we'll see. And here is sort of the strategy as we look at this paper trade example, okay? If we did one half here, if we just did 50 shares, and by the way, I realize I wanted to do a round lot, but that's still a lot of, that's a large, amount, even 50 shares here at 508. But let's just say we were going to do half. And so if it was 50, we could do 25. Well, shoot, you know what? Maybe it's so high. I'll just do this. Let's say we're going to put in a total of 50. That is a big number. The more I look at it, let's just do 25. It's still one half of what we're doing. We're going to say in total, we're going to be looking to put a max of 50 in, not on each one. I'm used to doing round lots, but we'll just do 25. It's okay, as long as the concept's down. A little bit of money management here. Think about this in terms of the potential risk if we did 25. Does it reduce our risk? Well, what if prices fall back down? They make a lower low, they don't hold at 500, they break below, and then they continue on down. Now, that might not be a likely scenario or outcome that an investor might be looking at after earnings, after potential tariffs, after a range and a high, after a strong sector and a market that's been recovering, right? Tying in some of that top-down analysis. So they might say that might not be too likely, but if we only had 25 shares relative to 50 and we had an exit down below, well, we'd still be losing less, half as much as if we were using 50. So there's just an idea there. Okay, so let's do that, but let's think about an area of a potential exit. Now, a lot of times we will use an ATR. We're using half an amount, so we could go maybe like a 2 ATR. But what does that ATR look like, that average true range? I'm going to put that in right now, ATR. Let's click over here, put this guy in. I'm just using the standard Wilder's ATR. It's at 12, so if we doubled that, we're looking at about 24, 25-ish. That exit would be roughly, if I'm going to drop that down 25, look at that, or 24, you're getting about that much of a range. You're giving it quite a bit of flexibility. Okay, so I'm just going to say 485. 485. Let's go ahead and set this up right now. I can right click and I can create a custom order with a stop right here. We could also look at a target of the upside too, but that's okay. For now, we'll just use what we've got. I'm going to go ahead and go good till cancel order on the exit down below. It was 45. We were looking at 485. Tab through. We're going to go ahead and click over here and go to our 25 shares. Boom, and link that up. There we go. 25 and 25. Look okay, everybody? We are playing the bull flag. Hasn't moved yet, but I just want to get it started on this one so we can put one under our belt here, anticipating that it will ultimately bounce. We don't know if that will happen. And we're just, it's just a paper trade example. A good example of top-down analysis as well, but good look at the dialog box so you guys can see it right here. And this is what we've got. So we're taking a look at it, buying power effect. Like I said, even 25 shares is still getting up there. I mean, 25 shares in the 500 range, it can be there, but you can see what we've got. Let's go ahead and send that on through. And there we have it. Okay, we got one under our belt. Let me take a quick look at the chat, see how we're doing. Yep, past earnings report. Exactly right, Spurt. And it did beat earnings almost by $1. About 96 cents or something like that. Very close to it. Don't quote me on that, but I think we were close to it. Let's see, Gazelle says, does the spike in volume mean more sellers or buyers? Interesting thing is you want to kind of look at it and say, just using it right from money flow itself. So using the concept of money flow, Gazelle, and that I would say is, did you close up on the day? Now, not all of that money was going to be, not all of those were going to be buyers, but you could say, this is how money flow uses the logic behind it. If you closed up, you probably had more buyers relative to sellers. Does that make sense? You were up on the day versus down on the day, which is how that money flow is calculated. So that's how you look at it, really, in a lot of ways. Were you up on the day? We were up on the day here. Do you see us gap up on earnings? That was a good example right there. Okay, we're going to hit the Hindenburg Omens real quick, Chuck. Good call. But we got this one under our belt. We're just trying to figure out how we're going to play some of these trades going forward, just so we have some top-down analysis to look at. One more within this group just to kind of highlight as I went through here, and we'll take a look at it. But that was going to be some of the, I'll let you guys look at these, but like the airlines, DAL, not as strong, not nearly as strong, but it had a big sell-off. So the recovery's been okay. Look at this, shoulder, head, shoulder, question mark. You can kind of see it. It almost, when it starts to look like this, is it a head and shoulders, inverted head and shoulders? Or folks, is it a cup with a handle? Okay, we've got others in here to look at. Delta might be the one with the highest cup. Here's American Airlines, a lot cheaper stock. Can you see the cup and handle? Can you also see the inverted head and shoulders there? Possibly. Really strong volume over here. One more, UAL. This might be the easiest head and shoulder to look at. Shoulder, head, shoulder. It's an awkward looking cup if it is a cup, but man, that handle looks pretty more like a handle, like a cup and handle, sort of, right? And so this, interestingly enough, has the same retracement levels, okay, from here to here, but it's breaking outside of the cup. Might put us over here. So take a look at those. But industrials, still within the industrials area, I went through and I scanned that. All right. Well, we did some top-down analysis and we did some trades within there too. A trade. Give you guys some to look at as well. I'm gonna go ahead and take a look now at our market and sector review and go through some of these right now and take a look and see where we're at. Now, what's interesting here as we kind of wrap up just with some market assessments on some of our standard, I want to give you guys this to we'll kind of leave with this, give you a sense of, what's happening with the markets before we're done here. But you can see we did dip below. We came very, very close to dipping below minus 100. If we do that and get back up above minus 70, again, this gives us 2 to 3 weeks, potentially, according to the McClellan oscillator, of an upward or a sideways move. Now, technically, did we get below it? We didn't. It was minus 90. So technically, he says below minus 100 and then back up above minus 70, we might already be positioned for a rally back up. We'll see how that looks in terms of the McClellan. Now, advanced decline line, look at the sideways channel here. We came down, we held at some previous highs. A lot of times what we'd seen in this rally is we saw the advancers and decliners lead the way. So if you start to break out higher with the advanced decline line, if it shows strength as we consolidate, that can be, if we show strength as we begin to still consolidate here, that could be a positive and sort of a leading indicator for a move to the upside. Let's continue on. Okay. SPX EW, very similar. Kind of looks like that inverted head and shoulders pattern. But getting to our 5-year weekly on the Oman spikes, and Sergeant Chuck, we do not have any, which is exactly what the bulls would like to see. From this point on, this recovery to the upside did not look like this at all. So in other words, on a weekly basis, weekly scale, we did not see this lower low and lower high range. Do you see it? Lower low, lower high. Bam. Massive Oman spikes right through there. Associated with this recovery, nothing. How do we say it? Well, one way is zero. Not yet. Not yet. None yet. So not enough 52-week new lows to offset the highs, right? Which can be a fracturing of the market. All right, we'll wrap it up with a couple of these folks. Still some consolidation here. Would kind of anticipate that a little bit as prices have gone sideways in terms of all-time highs in the S&P 500. We'd like to see this trending up. I should say not all-time new highs. It's new highs on a one-year basis. So if we can break above our highs on price, and even if we can't, it would be nice to see this trend come up higher in terms of a breadth indicator. There's just a good look at seasonality, right? The average of the S&P in red. This is what we're seeing right now in terms of prices going up this year. And it might begin to stick with a historical theme in terms of a seasonal theme. And sometimes you'll get that. Not every time, but one way to look at it is if you continue to kind of ride up a little bit higher, and you start to see these highs and lows kind of match up a little bit better. Okay, that would be interesting if that could unfold, right? Because then you can kind of get some ideas there as well. All right, what I wanted to do too is show you guys over here on the market forecast tool, which we look at from time to time. We are now above 80 in here. And when you get above 80, a lot of times that's where, prices can kind of hold above a range, as you can see over here. And when you're in that scenario, what can happen is you just might see continued strength. Now, on Friday, I did teach a class in our Think Scripting class. In fact, I'll just pull it up here for you right now so you guys can see it, where we talked about coding early entries for a market forecast system. If you are interested in this, I'm going to go ahead and just post this link into the chat. I just want you guys to have it because you don't see these links too often. They're kind of rare signals. That's the link right there to it. So they are rare signals, but I was thinking of you guys when I did this because we talk about it so much in this class, and I figured we haven't done that before. It's a source code that's hidden, but there are still ways to tap into it for potential entry signals. And so just a quick note, throw that out there, folks. It was good being with you here today. Again, we're going to take a look at, a number of top-down trades and hot sectors. What traders would consider hot sectors, or the strongest sectors, I should say, with the trend going forward in this class, doing example trades as we dive down into those numbers. But it was great to be with you all, folks. If you found something useful from this presentation, smash that like button. Love to have you subscribe, the subscribe button as well if you're not already. And John has posted again in here for us that survey link. If you get a chance to fill that out, that'd be fantastic. Thank you so much for your help, John, today. Really appreciate it. And it was good to be with all of you folks. Look forward to our next discussion. See you next time.